Hi everyone and welcome to FX Evolution's Market Wrap on Friday the 3rd of April. So we're into the new month and probably the volatility is going to really start to pick up now. We're going to see some of the economic data that has been playing out in March reporting in April. So yeah, some fun times ahead in the currency world, I'm sure. But we'll jump in and see what we're looking at on this non-farm payroll Friday and see if we can see any opportunities before the announcements tonight. Let's jump straight in. So we'll make a start on the Aussie. So we can see that we've had this nice pullback to the 20 moving average on a daily chart. I really do love this level. You know, I think it's certainly reacted there. We can see these couple of candles that played out around this 20 moving average. We've seen the rejections and we've seen a little bit of a sell-off now. You know, look, whether it continues on its way down, I mean, you know, MACD's indicating that it might have a bit more strength on the upside, but you know, it's got a little bit of work to do before it gets past this level here, and I think we'll draw a fib on it to make sure that we're getting our levels right. We'll pop that on there now, and yeah, we can see here that, you know, it's gone all the way to the 61.8 if we draw the fib from top to bottom. You know, a pretty deep pullback really, and it's hard to see it really breaking up above that without any you know, serious resistance at this point here. So I'm thinking probably more downside pressure than anything else. We're hovering around that sort of mid 60 cent range. If it breaks down below 60 is probably optimal to maybe get down to, you know, these levels here again around that sort of 57, 56 area, which is probably fair value for it. So we'll keep an eye out on it. But yeah, certainly looking short at the moment. We'll continue to watch. If you're looking for an entry point on this one, maybe if it comes up and tests that 20 again, potentially looking at a short there. But other than that, yeah, change of trend on the smaller time frames, and yeah, we'll see how we go with that one. Okay, the US Dollar Cad, it's continued. It's you know, sort of a funny sort of week really. Like, we're on a daily here. We can see we've had some big moves each day, backwards and forwards. So a little bit to play out here, but it has rested on the 20 every single time. So it's certainly indicating that it probably wants to go long, but it has had 3 days of rejections every time it's got up to this level here around that sort of mid 143s. So, you know, to see a meaningful move up, it's going to obviously have to break this level here. We want to see a daily close above that 143 sort of 50 area. If we get that, I'll probably be convinced that it's going to go longer and test these new highs up here again at the 146. So we want to see a close up there. Failing that, we want to see a lower low. So if it does break down below the 20 and comes down and tests this low and makes a new low below that sort of 139.20 area and closes there, I'd be convinced that we've got to change a trend. We've got our a peak, a trough, a lower peak, and then would have to be a lower trough for that to happen. So yeah, stuck in no man's land at the moment. Not keen on it either way unless it goes low from here and closes below it, or breaks above here and closes above that. And that gives us probably, you know, the best part of 3 cents either side before it finds any reasonable support or resistance on both sides. So not a bad one at all. Okay, the US dollar Swissy is one that, you know, we look at it now because it is starting to move a little bit, but, you know, it's still hovering in this range that we've been discussing for the last little bit. Not much seems to change with this one, but it's still providing some reasonable opportunities. It's broken back into the channel. So the obvious target, if it's going to go long, is the 200 in the first instance, and then the top of the channel, which is around that sort of 98.50 area. So 2 targets on that one. I'm not keen on shorting it unless it breaks this bottom zone here. If it breaks, I'll move this line down to match those up. Okay, if we get a break below that sort of 96.20 area and a confirmed close break, then I'd be looking to the shorts on this one. But US dollar still looks pretty strong against a lot of its counterparts. So yeah, not very keen on shorting anything USD based at the moment. And we'll straight into the yen from there. It's also starting to look a little bit long. You can see that it's starting to make a series of higher peaks and higher troughs. This is a 1 hour chart. Yeah, we'll go out to a daily. It's got, yeah, look, it's hovering around that sort of 108 as we speak. Got a little bit of traffic in front of it. There's no question about that. It has to break past this support zone that was there. So now it's going to be pretty strong resistance for it. It's got 2 moving averages that it has to break and close above before I'm convinced that it is going to go long. But again, this is tied a little bit more to the S&P 500 as much as it is the US dollar. So, you know, it seems to be gravitating to what the S&P 500 is doing anyway. So probably not the best one to compare against the other US dollar based pairs. But That said, if it does break above these levels here and closes above it, we would be thinking that probably the 110.50 area is the next point of call for that one. Failing that, if it does short off these levels, which is half what I'm really expecting it to do, that's going to be a 38 fib of that last swing, and we're probably going to push down to the lows of around that 105. So the short has certainly got more potential in it, but it needs to break. It needs to do a bit of work on either side. In the middle of nowhere at the moment. If we get a break above this zone here, we can go long. And if we get a break and close below this level here, sort of around that 106.80 area, we'd be looking for the shorting opportunities there. Okay, on to the S&P 500. So this has been an interesting one for the last couple of weeks now. Obviously, the volatility has slowed down a little bit. We're still getting 1% and 2% days, which is still quite large, but nowhere near the 10% days we were getting only a few weeks ago. So we can see here that we've got a little bit of weakness. It's sort of hovering around that 2,500 level. Again, being a non-farm payroll day, we know that there's going to be a little bit of quietness in the market. So I don't expect any big moves in the next couple of hours, not until we get non-farm payrolls, and a lot of it's anticipated anyway. It's not like we're going to see anything that is going to shock us, but the market does seem to like to react. So as a general rule, if it's a really, really good trade, I'd still take it on a Friday, but it needs to be a pretty good trade. So a lot of these are watch and sees, and you can see that they're in levels where you probably wouldn't be jumping in on them anyway. So this one here, the obvious target for us, if it gets back and breaks this low here at around the 24 sort of 30 area, we'd be looking for it to basically continue on all the way back to the sort of that 2200, 2190 area. That's the logical place it'll go if it makes a new low here. It's almost, there's nothing there in front of it, so that's where it's going to go without anything untoward happening. Failing that, if it breaks up higher and breaks these highs, you can see here for 4 days it could not break this sort of the 2635, 36 area, could not break it. So a close above that zone would be a very, very bullish move for this particular indice. So again, one to watch. In the middle of nowhere at the moment, only be shorting it if it closes below this level here, and only be longing it if it has a close, and a daily close that is, above the 64445 area. Needs to completely close above there. Then I'll be convinced that it's going long, because then that will be a series of higher highs and higher lows, which is obviously a very big change of trend, on a daily chart. So certainly one to pay attention to. Setting alerts on this one as well. Okay, let's move on to gold. So this is a 4-hour chart on gold. We can see here that it's kind of been hovering in the middle of nowhere. Look, it's come back. It did the right thing for us. It came back and tested these the support level here at that sort of 1571. A lot of people were able to get involved in that long. It just seems to be the gift that keeps on giving, that level. I know a lot of people got involved in that one. I've got plenty of emails to say so, which is great. They're obviously well and truly up. You're up the best part of $40. It's got a fair bit of resistance in front of it now. You've got a Bollinger Band, and these highs here are going to take some breaking, this sort of level around that 1620. But if it does break it, there's no reason why this wouldn't be going up here and testing the 1700 again. So if we get a close break above this level here, I'm going to be very, very bullish on gold. Okay, I'll take it to a daily just so we can have a daily view of it. You can see that earlier in the week came back and tested that level. It's just been a perfect level for us several times this year. But this is the level we need to break, okay? So we need a daily close above that sort of 1650 area. If we get that, 1700 is certainly going to be the target. But even if it comes back down, it's going to take a little bit of breaking to break the 1570 on the way down. So we want to see a considerable close, and probably by a little bit too, to start shorting this one. And the logical target will be this level here at around that 1450. I can see that these lows here will act as a pretty good support zone. You can see it's got a lot of support here. So big move down if it does break that level all the way down to 1450, which is going to be the first point of call for it. Okay, the dollar index is the next one. It's just tracking higher and higher on the 1 hour chart. You can see here. Again, the moves haven't been extraordinary today as we would expect, but it is still making higher highs and higher lows, which we always love. Okay, when we go to a daily, we can see it came off a pretty key area here, had a really, really good bounce off. which is obviously boding very well for US dollar strength. So, if this continues on its merry way, it's well and truly trading above the 100 now, 100 and nearly 50. So 0.50 that is. So as long as it closes above here, that's a very bullish sign for it. And if that does play out, it bodes very well for obviously the US dollar CAD and the US dollar Swissy, and to a lesser extent the US dollar yen, which is still a little bit convoluted. But what it does do is spell shorting for basically anything against the US dollar, the euro in particular, which we're going to look at next. But we want to see a close above the 100 definitely on a daily chart to convince us that this is going to go longer and potentially test the highs of the 103.75, which we saw a little while ago. All right, the last one we're going to look at today is the Euro USD, the one in question. Okay, currently making lower lows as we speak. So certainly doing the right thing. Look, it's been a pretty good trade, this. Like we've had, we've got the head and shoulders here. There's no question about that. We can draw the neckline. Like we even had a test of the neckline, from the bottom end. So you can see the right shoulder, or the left shoulder, sorry, the head, the right shoulder here. Okay, it's come back down. It's got all of these moving averages actually supporting the neckline. So when it came back and retested it, so if you missed the initial break, when it came back and retested the neckline from the bottom end, it had two moving averages effectively in between it as well. So it was going to have a lot of trouble getting through that on the 4 hour here, as you can see, and consequently it did what we would want it to do, which is short off. And this pattern's already played out. So this head and shoulders has already finished up, because you can see that range from the top of the head to the neckline is complete. Okay, it doesn't mean it's going to finish here, but obviously, if we take it out to a daily, it is at a place now where it's fast approaching a pretty reasonable support zone. Okay, so that's sort of 107.80, which is obviously the target. Not far away, it's only 30 pips away, but that's probably the place it's heading to now. I would expect it's going to find some sort of support there, but depending on what the numbers are like tonight, of course. If the numbers are shocking and it changes the game, this could potentially shoot long just as quickly as it can shoot short. So I wouldn't be jumping into this trade. I don't think it's a fantastic trade, because the winning trade's already been there, which is the head and shoulders. So what you're doing now is basically scalping to the support zone if you're going to short it, if you get a reason to do so, or potentially longing it back to the neckline. But that pattern is well and truly over, so we're not trading that one any longer. Okay, so I hope everybody's had an awesome week's trading. The market's been fairly fluid, a bit of volatility has left, so we're starting to see some steady moves now. Again, keep scalping. I don't think we're getting to the long-term category yet. We certainly got a bit more volatility to play out in April, and we'll see what gives after the non-farm payroll results tonight, and we'll look for some new trades next week. Have an awesome weekend, everyone.